You said his allocation was wise, and I am certain that there are people who heard that right now and are just like screaming at us.
Hello, everyone. Welcome to another episode of The Circuit. I am Ben Bajarin.
Greetings, programs. I am Jay Goldberg.
Well, there was news this week, but it was a lot less chaotic, I guess, in before, but still some significant stuff going on across the board. But I wanted to start off with a theme that I saw get brought up a lot this week because there was a couple of reports and articles on GPU depreciation, or essentially the life cycle of a GPU. And I think I think it would be interesting to talk about this a couple ways. Um, and I'll just sort of, if you just look historically, and I'm just going to give the historical perspective, and then we can talk about like, how does that work out today? But historically, hyperscalers, right, or those with infrastructure in the public cloud would essentially look at their infrastructure installed base and they'd say Intel, AMD, whoever's coming out with new CPUs, so I'm going to refresh 1/4 or 1/3 of my available servers in certain locations. And that would lead to, the data center CPU market was something like it's around $30 billion, but call that 20-ish or so, 25 million CPUs, give or take. And they would just refresh some portion of that, right, as in their infrastructure. And so over the course of, call it 4 to 5 years, they would have refreshed, right? So the oldest thing is kind of 4 years. Now, this is the question of the dynamic for the data center today relative to AI. And there was some arguments that Blackwell is such a big increase from Hopper, and this is true, that it just made more sense to pull out more than, call it, your traditional percentage of refresh because of the token power performance that you get with Blackwell. And people were out talking about, the average life cycle if you increase the annual cadence of NVIDIA of a, let's just say, 50% performance or 50% efficiency increase, that you might just want to really rip out more of your data center on an annual basis than before. And there was a lot of pushback on this idea, but essentially I get the thesis, but it basically would have meant the life cycle of a GPU is closer to 2 years, maybe three, instead of 4 to 5. So everybody's kind of approaching these two ways, right? Which is that right now people are still making money on 5 to 6 year old GPUs, right? Anything that's available. Even hoppers are still in wide use. Costs have come down. I think I saw an estimate the other day that costs have plateaued around $1.50 to $2 per GPU hour for hopper, and it's not dropping, which means that there isn't drastic excess capacity. But I was talking to a friendly in the data center space who said there are 7-year-old GPUs that are still making money for a couple of these clouds. So not to say that again, I think I'm totally on par with the leap of improvement that is these rack clusters to prior generations. I just don't see this life cycle really changing because one, I just don't think Nvidia could make and sell enough racks. And I have a stat on this, which I'll tell you after I let you pontificate on this point. But I don't think Nvidia can sell enough racks to satiate even 50 to 60% of data center refresh. And two, I think they're still making good economics from N-1, N-2, and N-3. And why take capacity offline when you're still monetizing it? When again, those have depreciated and you're looking at a gigantic capex to try to buy another 15, 10,000 racks if you can even get them from NVIDIA.
So I think there's an important distinction that needs to be made here, which is there's really two questions. One is the physical lifespan of a GPU system. How long does it last for? And then the other question is what is the economic lifespan?
Right.
How long can it make money for? And those are two very distinct topics, and they are blurred, sometimes deliberately blurred, in these discussions. So you buy a GPU today, it can probably well maintained. Can continue to work for probably not 10 years, but like 6 or 7 years.
Yep.
Much beyond that, and it just is pretty much fried. Like just you start getting meaningful error rates somewhere in the system, right? Separate. So what we've seen is the at the start of the AI boom, all the hyperscalers seeing that the capex budgets were going to be huge, they adjusted their depreciable life accounting policies
Mm.
from 5 years or 4 years to 6 or 7 years, or 5 or 6 years. They increased it a little bit, right? Because they previously had said, for practical purposes, like you said, we're going to buy a server and we're going to replace it after 4 or 5 years. That's just sort of what it was happening. But they played with their accounting and they said, no, we're actually going to depreciate over longer, which has the effect of decreasing the depreciation expense every year. And I've seen various estimates on these. I've done some myself. If you actually go back and adjust and use the previous accounting method, it has a meaningful impact on profitability of all the hyperscalers. So there is that accounting thing taking place. I have done math on what it looks like for the neoclouds in particular. They buy a rack from Nvidia and they depreciate it over 5 or 6 years. So on the one hand, they claim that they are still, like you said, they're still making money, they're still generating revenue off of 5-year-old Hopper systems, or even older A100s, right? So they can make that claim. Oh, these things will last a long time. We can continue to generate revenue from them. The problem though is the pricing curve, right? If you have a Blackwell system today, you can charge a premium for it. But because Blackwell systems are now widely deployed across the market, the price for Hopper systems decline, and the price for A100s decline, right? So there's this constant price curve, and depending on how you model those out, like the slope of that curve and how you model that out is very important to how much money the neo clouds can make, right? And you sort of think of, so if you look at the sort of baseline assumption is, you say, all right, today I can charge, what is it, $6-7 per hour for a Blackwell system. A normal price curve from that, you'd assume, okay, Blackwell's at 7, Hopper's at 5 or 6, A100's at $1. Fairly sharp curve. That's a traditional price curve for these things. And on that basis, you really only make money from a new system for the first 2 years of its life, right? Beyond that, prices decline because there's Blackwell and there's Blackwell Ultra and then there's Vera Rubin. Every year there's a new one coming out, and so the prices for your older systems, the prices that you can charge your customers for the older systems, declines, and the bulk of your profitability comes in the first 2 years. After that, it's kind of break even at best. Possibly even you may even be losing money because you have the electricity costs and stuff like that.
Yep.
Right. So that's the sort of naive model that people would use to model these things out. Very sharp, sort of sloped exponential down curve. We actually saw that starting to take place earlier this year. We saw that price curve taking shape with prices for older systems coming down at the neo clouds. And then DeepSeek happened. And suddenly everyone said, oh, we got to do more reinforcement learning. We have to do, more complex inference queries. And so that actually drove up the price of the older systems. And so right now we're in this really good place for the neoclouds where they're actually able to make profits on older systems because there is that demand. Right. And so then the question is, how long can that maintain for? Because we do have Blackwell now in widespread use. Prices for older systems are still holding up. But we're getting into this world where I'm going to start checking GPU instances, maybe not daily, but certainly weekly, to keep an eye on things, because it matters a lot to how this all plays out.
Yeah. So I mean, okay. So I think that's good context. I think one of the things I was thinking about was like, what if we just looked at this in terms of, let's assume for the sake of argument that Nvidia, and this is the normal consensus number for now at least, that they're going to do somewhere between 50 and 60,000 racks next year. We know how much wattage this consumes if you assume a hefty mix of Grace Blackwell and a little bit of Vera Rubin, which I think is right given the shipping timelines. So I cross-referenced this with a whole series of data I have on AI data center capacity in gigawatts. Um, if NVIDIA sells 60,000 racks, that would be 19% of AI gigawatt capacity. So it's not even like, say they sell that, and it'd be hard to sell more. Like that would just tell you right there, it's a fraction of existing infrastructure, less than 20%, right? And I would give this a tilde. Let's say I'm off by, plus or minus 5%, but regardless, it's not 50%, right? If they sold every one of those that they can make, it's not like nobody can refresh 100% of their infrastructure anyway. So that to me was sort of, again, just a helpful way to look at. My tendency is that this will still be a 4-ish to maybe 5-year life cycle. I actually think Grace Blackwell could last a really long time. Like, don't take that offline if it's still cranking out inference tokens. Despite how much better, Feynman or Rubin or whatnot will be, Kyber, the one after that going forward. Um, because I do think racks change the infrastructure game, and they may want to depreciate those longer. Again, especially if perhaps those gains. But my main point is I don't see it accelerating below 4, and it might be 4 to 5, even 5 to 6, right, as a general average.
I think that's possible. I think it remains to be seen. Right, goes back to my perennial comment about long-term demand here. There certainly seems to be a high degree of utilization. Right, everyone says, "Oh, I have I I just need more capacity." I'm right, and if that keeps going forever, then yeah, everyone's going to use these for as long as possible, and those price curves remain very healthy, and the neo clouds make a ton of money. But that assumes a level of demand that is hard is not entirely clear. Um,
Yeah. Yeah. Well, and what we're not factoring into this also is, like, this is the point of existing infrastructure, not the data centers that are being built and or capacity is expanding, right? So they're going to need to fill that with stuff, which also means, say you fill that with, latest NVIDIA stuff. Well, you might as well still keep a bunch of your other infrastructure, yeah, right, where it lies, while it's still making money, because it's not just these racks, these for the next 3 or 4 years. Everything that Nvidia is selling is also going toward build outs, not just replacement. And so I just don't know how much that's going to affect this, when they'll have additional capacity to build, plus to buy, plus refresh some portion of existing infrastructure. Like, they're just going to have a lot of infrastructure.
I, I think that is after the last 2 weeks. I think it is safe to say that people are building a lot of infrastructure. Yes. Um, I so it poses an interesting question because so much of this activity is driven behind the scenes by Nvidia. Right. If you scratch any neo cloud deal, Nvidia is there cheering it on. Sometimes directly investing in it. What what's Nvidia's take on this? Because the key, there's two constraints, right? There's GPU capacity from TSMC, and then there's electricity.
Yeah.
The TSMC capacity is continuing to go up, right? They're getting more and more capacity over the next several years. It's going to take longer for the electrical capacity to increase. If you're Nvidia and you're starting to get more output from TSMC, you have more GPUs to sell. You're not going to like that scenario you just outlined. They're not going to like the scenario that you just outlined, which is keep using the old stuff. Because ideally, Nvidia would like to sell replacements too. Rip out those H100s by Vera Rubin, right? And and I think Jensen struggles with this because he's actually said that. He said, you know, once Blackwell comes out, you won't be able to give hoppers away. Right? He is very he's very good. Like that. I don't think he stays up late sleep thinking about it, but he is. It's on his mind. He doesn't actually like that scenario. He wants you to keep buying new
100%.
ones.
100%. I keep coming back to you can't. And the exercise, to be honest with you, that I went down for this, just looking at like, every stat out there I can find about available power, secured power, a fraction of that that's AI data center power, not just regular general purpose, right? Because you've got a lot of stuff going on that's not just AI data centers. Was because I wanted to say, like, let's just assume, let's run this scenario that somebody wanted to replace 100% of their GPU infrastructure. Like, how many racks would that be? Could NVIDIA even do it? And the answer is no. It's not even close. So, and I'm not really sure that dynamic changes because, to be honest with you, I don't really see our semiconductor manufacturing capacity scaling enough to even get to the point where Nvidia can move a whole lot more than 60 70K racks a year. Like, I get that they're scaling and maybe it's more, but that's a lot of wafers. That's a lot of manufacturing. Like, there's limits to that. So yes, it will go up, but I don't think it goes up 100%. Like, they don't ship 60 and then they don't go to 120, the next year. It might be 10,000 more. So point again, right? There's only so much that can be made. Therefore, there's only so much that can be replaced in infrastructure. And at the same time, right, Jensen is intentionally distributing these wisely. So, like, he's not even going to let a hyperscaler come out and refresh 100% of that, let alone he can't make it. He's not going to do that. So, he doesn't want anybody to be in control of the GPU supply from a single vendor standpoint, which I get. It's
Yeah,
not a bad decision.
you said his allocation was wise, and I am certain that there are people who heard that right now and are just like screaming at us.
Don't advocate for that.
It does not
I
feel
need
wise if you're
I need 100%. No, but I think again, right? You have this dynamic where they're going to buy what they can, right? I think nobody disagrees. Nvidia is going to sell every one of the GBs and VRs they can make next year and for the next few years. That infrastructure replaces old infrastructure. Like, nobody's ripping out GBs to replace the Ferro Rubin. They'll replace, A100s or a V100, which I've heard is still in use. Like, nobody knows how many, but there you go. Um, but like I said, I still think this is a. I agree with you. We don't know, but I still lean toward a. It stays 4 to 5. It maybe extends. I don't know, but it's certainly not going to be 3 or 2, like some articles came out and thesisized is what I'm reacting to here.
so I have to well I think see that's where I differ because I know that other people have done this math and I've talked to a few reporters who have heard my pitch on 2 years. There's an argument to be made there. It all will come down to this pricing curve that the neoclouds see. And like I said before sort of January of this year, those curves were pretty steep. And with all the capacity coming online this year and next, I think it's logical to assume that the sort of normal pricing curve comes back, right? It's just it's tough to call because we don't really know what demand looks like. I mean, I'll tell you one thing I keep noticing about Jensen when he talks, he is very much now in the mindset of his customers are the neoclouds. He's not thinking about what we think of as the AI customer. He's not thinking about the labs, the foundational model builders. He's thinking about the neoclouds. So when he talks about, oh, buy my systems, you'll be able to make so much more money from tokens. You'll have these AI factories that are just churning out intelligence. He's talking about the neoclouds. That's his customers. That's who he thinks about the most. And in that's great, but it's not the end customer. It's not the ultimate source of demand. And so I think, I mean, he's a master of communications. I'm sure he's fully aware of what he's doing, but that's who he's thinking of. That's who his customers are. And I think for a lot of the rest of us, we're sort of going to the next level, right? How much of what we're seeing at the neo clouds is just spare capacity for the sentient seven, the big seven, right? There's a lot of that. A lot of the demand we're seeing now is coming from those same seven customers who are building their own. So I think it's a I don't think it's clear yet, and I think there is a pretty valid argument for why you'd say these GPUs are only really. I mean, yes, they will technically last 7 years, but whether or not they'll be economically viable in year four is a tougher argument to make. Right now, yeah, yeah, they have old systems that are still generating revenue and probably making a profit, but we're in some pretty elevated times.
Yes, agreed. Okay, so yeah, I anyway, let's leave it at we don't know. It's not 1 to 2, but yeah, there's only so much that can be made and refreshed. But I do just want to make the point. Like I concede the thesis that Grace Blackwell, Vera Rubin, Feynman, Kyber, the next 4 generations, are nothing like NVIDIA GPUs before in capabilities. So I 100% get that it makes a lot of sense. If you can get as much as you can, you're going to replace as much as you can in older hardware. My point is there's not enough. There's so much infrastructure that it would be impossible, I think, to keep a 1 to 2 year cycle. But yes, these next 4 generations are going to be worlds of difference from Hopper and below. And I get why it makes sense to just keep turning that over. There's just going to be limits of that. And again, distribution across existing data centers and new builds. So more on that, but I hope we added some clarity because for whatever reason, I felt like this was an insane conversation that happened um, this week in the grand scheme of things. Um, so anyway, okay, let's talk. You were at OCP. There was actually a lot of news that came out of this, and let's just go back to the Ben's evolution of networking. So I was at another event this week, I for the first time ever was jealous of my colleagues because I was not at a networking event. So this is Ben's evolution of like seeing everything that's coming out of OCP and being crap, I can't believe I'm missing this. Where prior to this year, those words would have never come. That sentiment did not exist, but there was a lot of really good stuff that came out of the crazy times we have in networking.
Yeah, so I went to OCP, the Open Compute Project Forum, and I've been going to OCP on and off for years. I was at the second forum, which is probably 10 or 15 years ago, and back then they didn't go to a conference center. They went to NetApp's headquarters in San Antonio, and there's no expo floor. It was just we would go to working sessions in their conference rooms. Um, and I don't go every year. I go every 3 or 4 years, and it's always been interesting. It's a high quality show. There's a lot of interesting content there, but it's been kind of slow and a little sleepy. Last year I went, it definitely picked up. There was a lot of stuff going on, and this year was intense. Like it is. I think it has become the not just networking show, but it is the main hardware show in the U.S. right now in terms of all the things you need to build a data center. And that's not just chips; it's racks and servers and cooling and services and software that go set aside that. It's kind of everything. This is the best hardware event in the U.S. right now. It replaced Interop, which was a networking show, and I think I'm not even sure Interop still exists. But it was a really good show. It was a lot of high quality content. It wasn't just the expo floor. There were talks in 4 or 5 halls adjacent. Some of them were super interesting. And a lot of them were just packed. 500, 600 people, standing room only kind of thing. Um, it is. You're not the only one who is sort of missed it. Like there was very little sell side in attendance, or very few sell side meetings. I ran into a few investors on the floor, but it was sort of the hardcore semis people. Overall, it was just I was impressed at like the quality of the content. It was a pretty good signals to noise ratio, and the show's grown. It's 11,000 people this year. They have filled up the San Jose Convention Center. I think they're gonna have to move it next year, and it was interesting. Like, a lot of the chip vendors were there. Uh, a lot of the show, I will admit, was cooling. There was probably 50 or 60 companies with cooling equipment in their booths, which is a lot. Um, that's a big focus this year. But there was also a lot of networking stuff as well. Cisco was there, Arista was there. I would say that the overall sort of news flow that came out of it was mostly the announcements that came before. There were a lot of deals that got announced before. There wasn't a lot of actual breaking news. And in terms of like little, little bits of information that the street sort of thrives on, there wasn't a ton of that either. But it was interesting and informative. I had a lot of people trying to figure out what's going on in the industry right now.
Yeah. I mean, and there's also, this new standards body that came up so that people were sort of like, what happens to UA Link? And you're like, okay, well, I get that people are saying, no, not saying, hey, I'm out there like shopping around for this new standard, but it's new, right? And there's a lot of big hitters on that trying to make efficiencies in, east-west networking, which, is a problem, right? Everybody's talking about what we can do in active electrical cables and pluggables and packaged co-optics and stuff that will define how we link all this stuff together in the next 2-3 years. So it's just interesting again because this is, I mean, I have known of OCP for a while. I would say that it happens here in our backyard, right in the Bay Area. The last 2 years was nothing like what they saw this show, where it was
Yeah.
like all of a sudden this thing became ridiculously interesting, and but before that it was just a networking show. And so it just goes to show you, right, the time period that we are in.
Yeah, it is very. I mean, it's not even networking. I mean, the real root of OCP is about like the metal racks that hold the servers. Like those are the original specs. What kind of cables do we use to go from the power supply unit to the server? Not the fancy networking AEC cables, just like the plug for the power, right? Very very boring, mundane stuff, metal bending stuff, and it is expanded. I will say that OCP itself, the Open Compute project, the open source thing, I don't think that has ever exactly taken off. It exists and people pay attention to it, but nobody really adheres to it. Come on, right? I know there are people who want to disagree with me out there about that, but like really, nobody really complies too much with the OCP spec. But it is still a really good venue for people to talk about these kinds of topics, um, beyond beyond just sort of chips, but also HVAC and power and all those other parts that go into building a data center. And
Yeah.
I'll say what I mean. We should probably do a whole other thing on networking. We'll get Austin on, and we'll talk about networking. I would say separate from that is there's another really interesting topic I picked up on, which relates to what we were talking about a minute ago, which was every vendor I talked to at the show said that they're doing a lot of business with the neoclouds. And again, this is an industry for years. They had six customers, and those six customers would buy 60, 70% of their output. Very, very tight market, very hard to negotiate. And now these companies all have all these neocloud customers, right? I said a couple weeks ago I had a list of 70 neoclouds, but then at another conference I
Right.
was at, it said it was 100. This week, people are telling me there are 170 neoclouds, right?
Good
And
Lord.
I mean, and how you define that is tricky, but I believe it. There's a lot of anybody who has, a piece of land and an electrical outlet it can be a neocloud now, and so this is really good because a lot of the things that the vendors that go to a show like OCP sell, they have to contend with the fact that the hyperscalers can do it themselves,
Right.
right? You think they do their networking themselves, they do their firmware themselves, they do their their OSS software or whatever we're going to call it, orchestration software. They can all do that themselves. They can design their own servers, right? They can design their own cooling systems. They can do that in house. But neoclouds can't. Even CoreWeave, which is large and fairly technically capable, they can't even do all this stuff. And so as a result, those 170 neoclouds are all going back to these vendors and buying stuff. And so the vendors are like, this is something I talked to with every single vendor, was they wanted to know what I was seeing, and like how long, not just how long it lasts, but sort of how many of these can stand up over the long term. Because what I think is happening is these collective customers, they're not a majority of revenue. The big six are still the main source of revenue, but all the growth is coming from the neoclouds, and there's a very large number of them. Their volumes aren't super large, any one of them. Even collectively, it's probably only 20-30% of revenue for most of these vendors, but it's all the growth. And then so there's a lot of questions of like, do we scale up a big sales team right now so we can like service these guys and capture it? It's great. It's they can sell high margin services to these people, these
Right.
customers.
Yep.
So do you build up your sales force now and try to sell to all of them, but then you have to contend with that sales force when the downturn comes? Those are the kinds
Yep.
of questions. Those are the kinds of topics, conversations I was having at the show.
Yeah. Yeah. Well, and I think again, right? I have heard from friendlies trying to help with this infrastructure build out for all these different, you know, let's just say there's tier two and tier three and beyond neo clouds. That a lot of them seem to recognize exactly what you said, that they have the land, they've got power connections, they've got secured power contracts, not just contracts under review, but like actually secured power. And many of them seem very happy to just lease their shells and fill them with people's infrastructure and just charge dollars on top of that. And I think that's fine. The software side of this gets really really interesting, and I'll say why for one thing. So I've been talking to a lot of folks in the middleware about like how might enterprises think about um, their workloads in a multi-cloud environment. And multi-cloud will inevitably continue to be a thing that essentially just says I am X company. Let's say I'm Walmart, and I have workloads. I have decided how I want those workloads to be run, and what they're going to end up doing is using an orchestration layer that could be something like VMware, it could be something like a handful of other things that essentially dictates where on-prem or in the cloud those things goes. It's basically, for lack of a better term, something like a GPU scheduler or a hypervisor. But this middleware services makes a ton of sense when you want to just access infrastructure in different locations, and you have an orchestration layer that is determining that for you. And again, I'm using this as an example for the largest businesses in the world who can afford to do this. But these are the ones that are going to drive a lot of this revenue for the hyperscalers. And so I think this is an interesting dynamic of, it may or may not matter, kind of who is there. Let's use this as an example of what Intel or Nvidia is doing with Lepton, right? Which is just, there's all these GPUs. You don't need to worry about where they are, and we're going to give you software that lets you just pick and then run on those. And so this orchestration layer, I think, gets really, really interesting, particularly in this term that everybody likes to use now, right? The agentic enterprise, which I don't really like this, but it just means like agentic's coming to enterprises. Fantastic. But the bottom line is, I like this idea that once this matures, once CIOs and CTOs and CSOs have worked all of this out, that some orchestration layer of their workloads exists that can distribute that to compute that's available, regardless of where it lies. And I think it'd be very interesting if that gets pulled off. And there's a lot of big services and ISVs who are already starting to make groundwork here. Again, whether that's on top of VMware or as another custom service from a big OEM who provides infrastructure. It'll add an interesting dynamic. And I'm not going to say that commoditizes the value that an Azure brings or AWS or GCP. But I mean, I know we would assume to go there. I'm just saying, for the corporate standpoint, it actually makes a lot of sense to have um, to have said orchestration layer help you determine your workloads when again you just you want to be able to distribute and leverage capacity wherever it exists. And I think that makes a lot of sense from an enterprise standpoint.
I mean, that was the original premise of public cloud, right? Exactly what you just described, where you offload some layer to some third service, some third party, and rent that back from them. I actually think that this dynamic is at the heart of everything that's going on right now, right? Why are the hyperscalers spending $500 billion in capex this year and more next year? And part of it, I think, is a little bit of an irrational just belief in we got to catch the new technology. But there's also a very sound strategic basis for what they're doing. In that, for years they've Amazon and Microsoft in particular have made a lot of money from public cloud, from Azure and AWS,
Yeah.
and they are losing share right now. Right, they have lost share to Oracle and the
Yeah.
neoclouds to
Yeah.
a meaningful degree. Like Oracle was an afterthought a year ago. Nobody thought about them in the public cloud. They were fourth place, and they kind of every once in a while someone would remember to include them in the slides. And now they're Oracle's on a trajectory to be number 3, if not number 2, in the next few years. Google, same thing. Google was like, I think on a year and a half ago, I was questioning whether Google was going to stick around in cloud. They've made huge progress. They've made huge share gains because of
Yep.
TPUs,
Yep.
right? And the neoclouds. And so Amazon makes a lot of money from AWS, and I think that is very much a threat. And so they have to spend against that. And the return on that investment isn't going to be measured in some crazy AI super intelligence thing that they can monetize somewhere down the line. It's going to be measured in that they can hold on to their franchise. Um,
Yeah.
right? And, you can make, and then like I don't cover these names close enough, so I'm not going to make big projections about it. But I think it's reasonable for them to have very serious strategic concerns about what's going on.
Yeah.
And things like Lepton, and then but then you sort of add into the mix, like from NVIDIA's perspective, because NVIDIA's driving so much of this. In NVIDIA, like everyone else who tried to sell electronics into the data centers over the last decade, had to deal with the power of those companies, and it was impossible to negotiate with them. You took their terms, you signed their legal agreements, or you didn't sell to them. And now they're not, like, capital is not the scarce thing. It's GPUs are scarce, and Jensen and NVIDIA have immense amounts of leverage now, and he's using that wisely, you would say, diabolically, others would say, but he's got the power, and he is using his allocation of GPUs to reshape the landscape in his favor, or in NVIDIA's favor.
Yep. Yep. And then you have people like news dropped today from XAI who's like, we're going to lease to own these GPUs. Essentially, Jensen is prepared to do whatever's possible to make sure people can get GPUs. And even if that means being a lender, and I joked like maybe they should collect interest on these things. Maybe they should be the bank of Jensen just to get hands and get these GPUs in people's hands and then make money off them and services, whatever.
Yeah, like this is the ultimate buy now, pay later product.
Buy now, pay later.
Finance your shoes, finance your wardrobe, finance your vacation,
$1
finance your
billion.
GPUs.
I'm gonna pay buy now, pay later. $1 billion. I mean, literally, that's what it's come to. Because again, it's not like there's not demand. It's that this is an obscene amount of capital that's required to take advantage of this demand, and there will be limitations. But people are going to do whatever they can.
I have a slightly different view on this. Is like in my mind, we're in a bubble, and I've been debating this all week. I think we're in a bubble, but we're in early stages of the bubble, and we're now at that transition period. This month, last 4 weeks have marked the transition from the early stage of the bubble into the next phase, where people are going from equity financing things to debt financing things.
Yeah.
And so the fact that people are using all these crazy structures and GPU collateralized GPUs and buy now pay later and rentals, that's not surprising to me. That makes perfect sense. That's how we go into the next phase of the bubble, is we start doing financial engineering. And the good news is that's going to really amp up growth. I think things can get even crazier in the next 12 months. it's going to make it a little bit more painful when it all stops. But like at least for the next, I don't know how long, months, things are going to continue to be pretty frothy.
Yep. Yes. Agreed. Um, okay. I do want to talk about a little bit revisiting the topic of power that we dealt with the other day. So a interesting acquisition took place that I'm gonna let you articulate this week between a couple of mainstream names, but then there was some tag-alongs that got involved. So walk us through that because a data center or a power plant or some large bit of infrastructure was purchased.
So a consortium of investors acquired Aligned Data Centers, and Aligned Data Centers is one of the largest data center owners in the U.S. They own 5 gigawatts of. They own sites that have 5 gigawatts of capacity, and the investor group included BlackRock, the big private equity fund or big finance hub, Microsoft, and Nvidia. And for people in this, people who cover this space, this is a massive deal. And Line Data was one of the biggest operators out there, and it is it's interesting that like I know I have friends who work in oil and gas, and they say that in their market sometimes you go out and you explore for you explore for oil under the ground, and sometimes you explore for oil on the floor of the stock market. And I think that's what's taking place here is where the everyone's out there looking for new sites to build electricity to build data centers that have electrical, like let's build a new greenfield data center that has electricity. We're running out of those, and so now we're going to start mining for oil on the floor of the stock exchange and buying aligned data centers to get their access to their capacity. I think that's the implication of what's taking place here. Is Microsoft has turned over every rock to get more electricity. This is the next rock to get some, and how they actually play that, because Aligned Data has lots of customers. They're pretty filled to the gills. That I don't know, but it's certainly an important strategic move here. People need electricity. Find it where you can.
Yep. So on that point, I have talked about this before, but further confirmation and other details on the supply chain challenges that is going to be power equipment for the grid. I was reading an interview today with a engineer from Honeywell who basically said we're at 2 years of lag for transformers, and that's going to get worse in the next 2 years. And the scariest part about this, and it's not just transformers. There's like the things that power the transformers. There's connections to the grid. There's copper that's involved in these that's hard to come by. So like again, every part of this stack is challenged, and that supply chain like doesn't all of a sudden go, yeah, we wake up tomorrow, we can produce 30% more. Like it's very hard to ramp and scale parts of this supply chain that are just not equipped to ramp and scale and meet this demand. And so this particular guy was like, I don't think things normalize until basically he said 2033 to 2035 in the grid, in the power era section
Yeah, yeah,
industry.
yeah. I heard something recently on gas turbines. Right. One of the interesting things that's been taking place is Elon is building his data centers for X.AI, and he's not waiting to get electrical connections to the grid. He's just going out and building his own gas electrical generating plants. Right? He did that in Memphis, and okay, that's great. But now there is a multi-year backlog for gas turbines. I think
Yeah, I heard 5 years. 5 years is what
it's
I
like
heard.
5 years. Yeah, I don't know the exact numbers, but they can only make like each company only makes like 5 or 10 of these a year. They're big. For the really big efficient ones, it takes those guys only have so much capacity, right? And if you're a company that makes electrical turbines, how how much capacity are you willing to bring, extra capacity are you going to bring online right now
Yeah, yeah,
for all this?
yeah, yeah. So
those yeah.
my favorite anecdote, you're gonna love this. This is exactly a Jay anecdote. So one of my friends, his friends, works in industry and they sell manhole covers. They make manhole covers, and there's so much digging in the ground for this that they can't make enough manhole covers to satisfy the demand. There's a shortage of manhole covers for people building it. And so there's just holes in the ground, Jay. There are holes in the ground. There's cones around things because they don't want somebody driving or falling into a manhole cover because they can't make enough for all of the underground infrastructure that's being put in for things. So this is the great American comeback story is infrastructure. We got people making power equipments. We got jobs for manufacturing manholes. Like industry is being created in every pocket of the business. Anyway, supremely wild.
You know what? You're right. I love that story. The great manhole shortage of 2026.
We don't have the manholes. Okay, before we go, we have to touch on TSMC's earnings only to say a couple of things. One, they're out there basically going, demand is ridiculous, which is basically what they've said the last 3 times. But my favorite part of the earnings was, we just want to make sure, I'm 100% paraphrasing, but basically it comes out, we just want to make sure we're not crazy. So we're talking to our customers, and they're all telling us demand is off the charts. So like, they're like, okay, we're going to raise capex. We can see 40% CAGR growth in AI accelerators through 2029, probably longer. But I just love that they wanted to just make sure, like, we're not insane. We're going to go talk to lots of other people to make sure we're not insane. And oh, by the way, everybody's saying the same thing. There's an obscene amount of demand for compute.
Yeah, I've been talking to people from Taiwan lately, and I've heard that there is a high degree of nervous tension at TSMC where they don't they see these orders coming in and they don't know what to believe. They are fairly skeptical about this. And I when you spend 47 billion dollars in capex a year, which I think that's their number for next year, you got to be a little bit careful.
Yep.
Although it's kind of funny. It's like, you compare that to the hyperscalers now. That's like nothing. Oh, you're only doing that. Amazon's gonna do 80 next year. Um,
Ugh.
but yeah, I will say this: the Taiwanese companies tend to be, I don't want to say more conservative, but they're definitely allergic to a lot of the hype that comes out of high level tech industry messaging. Um, like I've gone and pitched people in Taiwan about stuff that's just like incredible and exciting, and they're like, "What? How much does that cost? What is the?" There's just a high degree of conservatism or practicality there, and I think that is evident in TSMC's approach to this. Like they got to be careful about what they're doing.
Sure.
Um,
I mean, I get it, right? When you have the kind of world that they come from, which has generally been conservative in capex spends, because they don't want excess capacity. Like, they need to make sure, if we build it, that our fabs stay full. And
yeah,
what they're saying is, you need 5 more foundries, and they're not going to do that, right? They're just not, because maybe someday 5, that's too much, but they are conservative on this. But you're right, they are seeing just a level of demand. I mean, there was a report from the information that came out today that Sam Altman was over there basically begging for more capacity. I'm like, well, who are you going to take it from? Like, you're maybe a 7 or 8 inline customer. They're not taking it away from somebody else for you. Yes,
yeah,
they need more capacity. We get it, but where's it going to come from? Wafers
yeah,
don't grow on trees, Jay. ASML machines don't pop out of nowhere from a vending machine, an ASML vending machine.
yeah. It's I got a thought experiment. Like, imagine you're the CEO of one of the hyperscalers, and 2 years from now, it's all like everything is just turns down and it's a bust, and you have to ratchet down your capex and take a write off. What are the consequences for you? right? Right? For that happens to Mark Zuckerberg. The consequences are nothing, right? He
Right.
he doesn't lose his job. Maybe Satya or Sundar, Microsoft or Google, they get in trouble. Maybe, um, but Amazon, they say, oh, we're cutting capex drastically, but we still held on to AWS. It's almost a win.
Right.
At TSMC, if you suddenly have an empty fab, you built three
Absolutely.
fabs and they're empty.
Yep.
That's like that drags down. That doesn't just drag down the CEO of TSMC. It drags down the whole Taiwanese economy,
Yeah.
right? And
Exactly.
so they're right to be a little bit more cautious about this.
Right. And I expect them to keep that approach. Like that, this is just going to be their playbook, and because of that, we will largely be constrained for the foreseeable future. But from an understandable perspective on their behalf, so
Yeah.
there, is there lies the landscape. So, all right. Well, the thanks for listening, everybody, and we will talk to you next week.
Thank you, everybody. Tell your friends, click subscribe and like, and give us good reviews.